US bond 2-year yield falls below 10-year yield for the first time since July 2022.
Japan's Nikkei 225 index plunged about 20% in last few trading sessions, which is the worst fall since 1987.
Indian stock market investors lose 15 lakh crore as US recession fear hits the global market.
The 5th August fall in stock market gave Black Monday vibes as most of the global indices had tanked more than 2.5%.
So are we foreseeing a recession that is worse than 2008?
What are the reasons that triggered this crash?
How will India get impacted if we end up in recession?
What are the views of global economic experts?
To find answers to all these questions, please stay tuned till the end of the video.
Before we move further, let's look into some facts and figures. In macroeconomics, the SAM rule or SAM rule recession indicator is a heuristic measure by US Federal Reserve for determining when an economy has entered recession.
When the 3-month moving average of the national unemployment rate is 0.5%, point or more above its low over the prior 12 months, we are in the early stages of the recession.
Now, let's check how this rule has worked in past, how robust the tool is.
In conclusion, the SAM rule is reliable as it has predicted the beginning of a recession with a high degree of accuracy.
As we can clearly see on screen, the SAM value has again crossed 0.5 in August 2024, which might be early indication of recession.
Earnings have been strong, but not strong enough. Longer-term earning forecasts have simply become too lofty amid all the AI hype.
Recession fears are back in vogue. Slowing consumer spending and a weak July jobs report have put recession fears back on the menu.
Conflict in the Middle East is testing investors' nerves. Markets have largely brushed off Israel's campaigns in Gaza, but now Iran, the key oil producer, may be at the verge of expanding the war.
The carry trade is unwinding.
Volatility-induced selling is making it all worse. Rising risks of an ongoing tech sell-off, a wider war in the Middle East led Wall Street fear.
Now, let's understand what are the experts saying. According to Bloomberg report, economists from the Goldman Sachs Group have increased the probability of recession in United States in the next year to 25% from 15%.
Experts expect the markets to stabilize globally in the coming few sessions. Many see this correction as healthy for the Indian market, which was at a very high valuation.
The other angle to look at it is that a global economic slowdown benefits India in a way.
An economic slowdown in the West causes the oil prices to crash.
A fall in crude oil prices is a positive for Indian economy as it trims the fiscal deficit and improves the exchange rates. If you like the video, please do comment, share and subscribe
to our channel Nick and Spandy Entertainment.